Yeah, what's up, guys? This is Mr. BNB. Shout out to all traders out there who are trying so much to believe in themselves. So, guys, very quickly, I would like to show you some pairs we took on volatility index, right? So, and also crash 500. But before that, I would like you to subscribe to our YouTube channel, click on the like button, and also drop your comment. But let me just remind you that forex trading is a business. So I see no reason you should give up. Don't give up. Trust the process and keep on pushing. And I assure you that if you don't give up, you will smile very soon. Understand? So, guys, let me show you some secrets some mentors will be hiding from you about the forex market, about the synthetic market and stuff. So now, guys, let's go straight to volatility 10. Now, I'm going to show you before and then the current market. That's what I want to show you right now. So now let's check. Let's check before. Let's check before. Just hold on, guys. Hold on. Where is it? Now look at this. This was before. Understand? I entered this market around this particular zone. Can you see from this place? So I bought the market, which I've been holding the market for days now. Understand? I'm going to show you everything and how I analyze the market. I'm going to show you. You can see it, and then this is the results here. This one, you can see this is the result here, not this one. This is a separate analysis, different analysis. Understand? So now this is the market. Can you see? This is daily time frame. 1, 2, 3, 4, 5, 6, 7 instant, which means for 7 days instant. I just leave it there because I have 3 accounts instant. I'm running on synthetic. Now, guys, let me just show you. And then if you want me to have a private mentorship with you on synthetic, just send a message to me on my Telegram or on WhatsApp. So let's go straight to what we want to do today. So, guys, here, this is it. Now, the market was here, right? The market was here. I entered the market here. So let me delete the chart. This is the chart now. I've deleted the chart. Please hold on. Okay, so look at it right here. If you see this market you're seeing, you will see that we have an order block here, right? There is an order block here. Check and see. There is an order block here, right? And also the order block, what are the criteria that makes the order block to be valid? Number one, it sweep this liquidity right at this point. It sweep liquidity, and also it has an inducement. You can see this pullback is an inducement, right? You can also tag it as liquidity, right? So here, right? So now we have this place as our what break of structure to the upside. This is our break of structure to the upside. Understand? So now the market start moving like this, pull back. The market was creating series of higher highs and higher lows, higher lows, higher high, higher lows, higher high, and then the market got here and the range and consolidate for some period of time and drop sharply. Understand? But before the market drop, the market has already created what? An order block. Are you following what I'm trying to teach you? The market has created an order block. So that order block is our target for sell, right? That order block is our target for sell. Now, look at it. The market drives to the downside, push up, give us a little pullback here, and then also push to the downside, mitigate the order block, push up, drop to the downside, right? Then pushed up. As the market pushed up, the market started dropping instant. So when I saw this, I knew that the market is about to buy. Do you get me now? So now let's focus on this particular price action here. This particular price action here. Now look at it. The market has given us what? This is another zone here. This one here, this other block here. Let me remove this. Right? Now, look at the market. Here we have stomp ons. This is our stomp ons here. Sorry. Stomp ons. That's our stomp ons. This should be at the bottom. This is our stomp on, right? Now, if you look at this market, we have the market start dropping like this, and then we have, this is the last lower low. This is the last lower high that caused this last lower low, right? And then the market pushed up. It dropped to the downside to mitigate the what? The order block, right? You know, the way synthetic move is quite different from the way currency move. Synthetic move differently than currency. You can study it. I've been trading currency and I've been trading synthetic now. So I know the difference, and I know how the markets move. Now let me shock you. Synthetic hardly creates change of character, right? It hardly creates change of character. Once it gets to your zone, it will drop sharply to the downside or to the upside, right? So there is a way we approach synthetic using the Falcon strategy. Instant combination of SMC and Falcon strategy. Instant. So guys, now the market start pushing up, push to the downside, pushed up, push to the downside, right? So the market was mitigating all this other block here. This one has been mitigated. You see, this particular order block has been mitigated by this, and also this one has been mitigated by this. This one, this other block has been mitigated by this. Now, this other block also has been mitigated by this, right? Are you following me? So, which means that this, I just use this one as our change of character. Let me check. I'm coming, just hold on. Which one did I use? Okay, I use this one as our change of character. Instant. Since this is our last lower high that created the last lower low to the downside, right? So market took it out, right? So as I say that the market has taken it out, I know that the market has changed structure from a downtrend market to an uptrend market, right? Now this is our change of character here. Understand? That's our change of character there. Now look at the market. After the change of character, normally the market is supposed to push down to this place based on SMC strategy. So now the market fails to come to the downside because we have our inducement here. So as the market pushed up, understand, this is our first break of structure here. So I was expecting the market to at least push to this place, but the market could not, understand. So I wasn't in the office around that time, understand. So now look at the market again. The market now gave us break of structure here. So I was waiting for the market again to at least come to this order block here. Because if you scroll down to lower time frame, maybe 15-minute time frame, you will see that this order block is yet to be mitigated. And all this one stands as our what? Inducement. All this one stands as our inducement. So I was expecting the market to push to the downside, but the market still failed, right? The market fails to do what? The market fails to do what? To come to this area here. Come to this particular zone here. Instead, the market keep on pushing to the upside, and that is how synthetic move. Go and check most of those pairs. You will see that the way it moves is different. Now, so I had to enter the market with two positions. So I entered the market here. I entered the market here, and I put my stop loss around this place, right? So my first target was this particular order block. My first target was at this particular order block. Because if you check this order block, you will see that this order block is a valid order block for sale. Understand? But I'm going to tell you why the market did not hold at this particular point. Right? Now, I had to close I had to go close one of the position, understand? Because the market gets to this zone and reacts. So the reason why I don't sell this market and why I leave the other one to run is because there is no good entry for sell. Though the other block is valid, understand? We have other block, we have imbalance, and we have a lot of things. There are some criteria that make that other block to be valid. But the point there is that that other block is not valid for sale. Understand? Market got there. Understand? Look at it. Market gets there and react. So I was like, this is just a pullback. The market is not going to sell. So I just leave the other one to run. Now, adding me, I see this kind of pattern like this, like something like this. something like this, right? Something like this structure, this Falcon structure, right? Then I'll be waiting for the market to do what? To give me, to take out, to break out of this trend line like this, then pull back to an order block here, pull back to an order block here, then I will sell to the downside. But just because I don't see Falcon, the Falcon is the second option for me for the entry. That is the reason why I don't sell the market. You can see now. So that's the reason why I don't bother to sell the market at all. So I just have to leave the market to let it run. And then if you check very well, you will see that the market is still pushing up. You can check it. Check it yourself. Do you see? Do you see? The market is still going up. Do you see? Right? The market is still going up. You can see. So which means that it is a long, you can see the market. You can see how the market bought. Because if you check here, I'm still holding the market. That's the truth. I'm still holding the market. Let's check again. This is it here. For days, for about 7 days now. Understand? This is the results right at this point. You can see, guys. So there's nothing to hide in this game. Understand? So now let's check. Let's check the next pair I took. Now let's consider crash. So this is crash 500. I took crash 500. Understand? So when the market gets to our order block, this is the order block here. I've been trading this market since yesterday. Yeah, since yesterday. So when the market gets to this place, understand, I bought it. I bought the market. So my TP was around this place. My TP was around this place. So when I see that the market start pushing to the downside, I had to do what? Close the trade. Now, let me show you guys something. Look at this market. This is crash 500. Now let's check. Let me share the screen and let's see. Because I took it in the midnight. Let's check. Okay, this is it. This was before. This crash 500, 15 minutes time frame. Change of character. Understand? We have first touch here, second touch here. I was expecting the market to mitigate this place as third touch. And then the truth of the matter is that the market also created an order block. So after I draw the order block out, I realized the market will bounce on the third touch. Then the market is going to buy. Now look at the market. You can see we have first touch, second touch, third touch. The market bounced on it and start buying. This is reality. This is what you can do yourself. You don't need to be lazy, right? You don't need to be lazy. I can teach you on how to make money, both currency and synthetic. Trust me, our synthetic fee is just token, understand? But I assure you, going to withdraw, you will cash out, understand? But that's not where I'm going. Now, guys, let me show you some things. Now, if you want to enter with, now look at this market now. Look at this market. You can see that the market took out. The market breaks the channel. We have first touch, second touch, third touch. The market breaks out from the channel. Now, this is how to trade with the trend line. This is how to trade it. Okay, so guys, now this is it. Look at it. Once the market touch your trend line like this, maybe the market push up like this. Once it touch the trend line, make sure you see at least 2 bearish candle. I'm talking about lower time frame. At least make sure you wait for 2 bearish candle or 3 bearish candle. You can see the market give us first bearish candle, second one here, third one here. Understand? So you can sell from this point and put your stop loss above this trend line. You get what I'm trying to say. Now look at it here. The market got to this place, mitigate the order block. After the market mitigate it, the first candle I didn't enter, which is this red. Let me zoom. Right? This is the first candle here, this red candle. The second candle, I entered the market, the second candle, right? Then you buy. Look at this one now. The market pushed up. So I took my profit around this place. The market pushed up, instant, dropped to the downside. Do you get me now? Some people start buying the market from this once it touches this trend line. No, that is not how to buy. You have to wait for what we call rejection candles, or you have to understand what the market wants to do first. at least you must wait for 2 bearish candle or 3 bearish candle like this before you buy. Then you buy, put your stop loss here. I'm not talking about higher time frame bearish candle, bullish candle. No, I'm talking about lower time frame, something like this. So this is not really bad. Your stop loss is not really bad. Then you put your take profit should be here. It should be here. So guys, this is what you can do yourself. Nobody should deceive you. Understand? Don't let anybody scam you. Trust me, you can do it yourself. So guys, this is all I have for you for today. More videos are coming. Please subscribe to the channel. God bless you guys.